All right, welcome everybody. Today we have Andy Kamoltz, and he is the founder of Edge Precision Manufacturing, a niche plastics company. And we'll get into Andy's business, but he went from a cash flow crunch to where he literally could barely make payroll to a significant sale to private equity. Okay, so we're going to go through that journey. Amazing story. Andy's going to share what he's learned. About building the business, surviving these all the challenges that he had to deal with, and then exiting to private equity. And before we get into that, thanks for joining us on the 8-Figure Product CEO podcast. I have an exit readiness test actually for CEOs. If you haven't exited and you're looking to exit, head over to apexceo.co. Take you about 5 minutes. You're going to go through, I think, about 8 or 10 questions that I have there, and it's going to give you an output and let you know how prepared your business is or what part of your business you should work on to have a better exit or to be in a better position where you're more desirable to private equity or other investors. So that's over at apexceo.co. You'll see the pop-up. It's not too spammy, and would love to get your feedback on it as well. All right, Andy, founder of Precision Edge Manufacturing, niche plastics. You started in 2005 and sold in 2022. Tell the audience what type of, and you're also a PhD bioengineer. So let us know how you got into this business.
Yeah, absolutely. Thanks for having me, Luke. I did my PhD in bioengineering, as you said, and got really interested in a specific area, microfluidics, which relates to actually what we were just talking about before we went live here. Some of the DNA testing, all kinds of things like that, all based on microfluidics technology. And when I finished my degree, I went to work for a couple of businesses in that area. And then I got an idea and said, gosh, I could probably start my own company, prototyping these designs and finding my own customers and building out that way. My wife was very supportive of the idea. I think she was more confident in it than I was. And we were very early in our relationship. Actually, we got married that same year, 2005. She sort of had like the double income, no kids situation. And she said, I think you should go for it. So I started the company. And by that point, making those parts in plastic, we had some technology for doing that. And I was able to acquire some equipment on the cheap from my previous employer and just was able to get a small space and start from there. That was how it all started.
Well, that's awesome. So just quickly give the audience just an idea. A lot of us have worked with plastics and consumer products, right? So what's the basic equipment you needed, and what's the basic product then that you'd be creating and selling?
So most people are familiar with injection molding. That's how
Yep.
most plastic parts are made, pen caps, Legos, everything else. We do something called compression molding, which is not totally different. You still heat up plastic, you form it to a shape with pressure, you cool it, and you get a final shape. But it works a little bit differently, and it has certain advantages and some disadvantages as well. It enables us, though, to do really, really fine features. So we're talking about features that are sort of as narrow as a human hair or narrower than a human hair.
Mm.
And as a result, we're talking about products that are really made for manipulating single cells, studying blood, doing other kinds of really, really, really high-end, typically biology-related assays, tests, conditionings, diagnostics, etc. So it's, typically we're making a device that will just be a single-use device where someone's blood gets tested or manipulated or something like that. Applications range from, like we were talking about, a DNA test to isolating somebody's white blood cells so they can undergo transfection for cancer treatment, to all sorts of other things. Tons and tons of healthcare related.
Got it. Okay. So what are the early years? What did you need to succeed in the business? Were these products sort of made to order, or did you make the product and then have to go out and sell it to the different, medical device companies or hospitals or whoever your customer was?
So everything then, as it is now, is contract manufacturing. So it's all one-to-one. But as is the case, the processes that we of course use over and over and over again. We have a lot of customers who have similar products. where we're doing a very similar process. So it's been about getting a contract, making a bespoke part for a customer to their design, but learning really well how to do that, adding to our arsenal, building up what our capabilities are. But at the end of the day, for the last 20 years, it has always been the customer who's driving what is the thing they're actually buying. We're not making OEM products that come off the shelf and go to multiples. Does that make sense?
Yeah, that makes a lot of sense. So is the driving force of the company then outbound sales early on because you're having to get these contracts, right? Is that sort of how you're driving it?
Yeah, absolutely. And it's very different today from what it was 20 years ago. And it's a rich topic that might be worth going into more detail if you want. The the in the early days, right, in the mid 2000s, this area of science was booming. I mean, you could look around anywhere and find people who were spending on single cell assays and developing products, and there was tons of VC money, tons of big companies investing hundreds of millions of dollars. It was actually quite easy, and I had more people coming in by referral than I could even handle. Every day I'd open up my email and there'd be 5 emails saying, "Hey, I talked to so and so from so and so. He said I should call you because you're the guy for this."
Mm.
And times have changed. I mean, a lot over the last several years, and a lot even just this year, as people know well. But also, as our company's gotten larger, our needs have changed, right? It's, what was a big project 20 years ago is now so small we couldn't even take on. And finding a bigger project definitely requires more effort than just opening your email and hoping something's magically there.
Yeah, no, it's funny you say. I wonder if it's related to the following, but I didn't tell you this, but I studied microbiology and chemistry. I just undergrad, didn't get it as far as you did, obviously, but I know the industry, and I remember back in similar timeline, right? So I think let's see, when did I graduate? I don't know, 98 or 99, something like that. And back then it was, the genome had been mapped, and it was like everything was going to be cured in the next 15 years, right? Is that kind of what you're talking about? Like there was a big push in the early 2000s. It seemed like everything was going to be cured. That didn't happen though. But that seemed
Yeah,
like
I
the push.
mean, I think there's a lot of factors, right? But I mean, I think in general, from the mid 2000s to the mid 2010s, really to the late 2010s, there was just an exponential increase in the world of biotech, in the world of spending and funding and people and all the rest of that. And it has been on the steady decline since the pandemic, and it is shrinking at an alarming rate right now.
Mm.
So it's just a different time.
Mm-hmm. Yeah. Okay, well, let me ask you a couple of questions. I think they're kind of a similar theme here. Okay, but still early on before we get into the sale process. You had some challenges early on, right? And we talked, you kind of shared about, barely being able to make payroll. And then at the same time, you had an interesting comment that says, business it's never easy, right? It's always a challenge. So I'll throw those two at you at the same time, but just kind of share, what you've experienced and sort of what that's taught you.
Yeah, I mean, so what I would say is, and particularly the more tech oriented a business is, and I know not all of your audience is tech oriented at all, but the more tech oriented a business is, the faster it changes and the more you're constantly having to reinvent new things. The biotech products, they go on the market. The day that you see them on the market, they're already obsolete from the company's standpoint, the company that's put them out. They're already working on the next one and maybe even the one after that, even just in that one product line. And it's the same thing for the vendors who are providing services to those companies. You always have to be inventing new technology. You always have to be moving ahead. And so there's never a time when you simply say, "Hey, we got this business figured out. It's all good. So it's done. We're squared away. Now we're just going to pedal, on level ground for the next 10 miles and just have a steady positive cash flow." It doesn't work like that. It never works like that. And I think for me, and I'm sure this will resonate with lots of your founders who are in your audience, when it was just me at the company, which it was for the first several years, it was okay. It didn't really matter how much money I made. As long as I made enough money to pay my rent and keep the lights on at the business and all the rest of that, it was fine. My wife preferred when I brought home some extra cash, and great. And there were years when I made a pretty nice income, and there were years when I made very little income. And there was one year when I did incredibly well, which enabled my wife and me to buy the house that I'm sitting in right now, which we bought, I don't know, whatever that was, 15 years ago or something. But once I brought on employees, because I had to grow, then everything became much more constricted, right? Now you have to be writing paychecks every couple of weeks or every month or whatever the cycle is. And the cash has to be there. And it's just a totally different scenario. So as I was telling you off air, I started to get really ground down around that, because I started to worry about, hey, has the shipment gone out? How can we write the invoice? Did we get the check from the customer? Are they paid us? Are they late? Are they not? The check came. Someone has to run it over to the bank and get it in the bank so it clears so we can write a check, all the rest of that. And it became annoying to me because it began to supersede the quality of the business and serving the customer. We got to a point where it said, hey, I have 2 hours of work left to get this shipment perfect, but the UPS guy comes in an hour and a half. So maybe I have to have it be not quite perfect because I have to get it out today, because I have to get the invoice written and all that. And that's just not okay with me, right? I want to do the work that is required to be done to give the customer the quality they expect and the quality they deserve. As soon as you're in a situation where you can't do that, you can't work to your own quality standard, something's got to give. That's why I made the decision to sell the company the first time around, which was in 2015, where I just straight up sold it to a company that belonged in part to a friend of mine. They took over my payroll. They paid all my bills and all my expenses, and then all my revenue went back to them. And at the end of the year, as long as we were cash positive, there was no problem. And there was no problem. And it was great. They didn't bother me. I didn't bother them. But we had a nice, stable business, and everybody got paid on time.
Yeah. So you had an exit in 2015. You also took on investors in 2018. And you sold again in 2022. So you want to quickly get us back to how you got the company back after you sold it, right?
Yeah. So the first exit was not a real exit per se, right? The company was struggling from a cash flow perspective and was pretty much cash neutral. So it didn't have a lot of intrinsic value, right? I couldn't have gone out and shopped it and said, hey guys, there's, I couldn't have gone and found 10 buyers and taken the highest bid and all the rest of that. But my friend's company paid us a fair price for basically the street value of our equipment and our assets and all the rest of that, which was totally reasonable and totally fine. They gave me some equity in their company, actually, just so that I would be invested in continuing to grow the business and all the rest of that. And, they took care of me from a cash flow perspective. And so it was a great situation. It wasn't a cash out event for me. It was simply let's take this company and let's make it stable and let's give it a chance to actually grow. Yeah. What happened then was that parent company took on investment from a VC investor a couple of years later, and our company Edge wasn't really even part of the story when they took on investment. We were just kind of a side little thing that didn't really have much to do with their business, because they're in mass spec and lots of other cool stuff that doesn't really relate to what we're doing. But the investor got in, they made the investment, and then when one of the partners started really getting involved and serving on the board and really poking around into the business, they said, "What's that thing, Edge, that's over there in the corner? You never really talked to us about that. What is that?" They were told, "Oh, it's a company doing this and that." Well, that happened to be an area of interest of this particular partner. So that partner said, "I want to meet this guy, Andy. We want to find out." Second meeting, he said to me, "Would you want to spin this back out into its own thing? We could infuse cash and you could just separate out from this business that you don't have anything to do with. We could build a whole thing out of this. What do you think?" And it took us very little time at all. I think we started talking seriously in February of 2018. And I think May 1st was when the next version of the company was quote unquote born.
Oh, wow.
So that investor bought, I think they bought 80% of the holdings from the previous company. Mm-hmm. So they became majority shareholder. They gave me some founder stock. I don't remember the exact percentage, but it was approximately 10%. I don't remember exactly. Mm-hmm. And then they also created a stock employee pool, all the rest of that. And then they put in a bunch of cash and we went from there. That was about 4.5 or maybe closer 5 years, 4.5 years or so, until we properly sold 100% of the business to our current owners, which is Zeon Chemicals, a Japanese
Mhm.
chemical company and plastics manufacturer.
Yeah, well, this investor did really good then on pulling you out and then getting you to a sale. But before we jump into that, tell me really quick. So you started 2005, sort of, the business wasn't, doing as well as maybe you hoped by 2015 or so when you had that first asset sale, just sale of the assets, really. Uh, what do you think was, looking back at it, what do you think you would change? Like, for example, was it one of those deals where you were maybe getting revenue but not margin, and it was too much of a commodity? I'm just, guessing, commoditized product in the industry, and you didn't have like a way to kind of demand some more margin on the product, or maybe something like that?
You're not far off. I think the problems more than anything, and actually goes back to an earlier question you asked, I wasn't really building the business properly from a business development standpoint. I
Mm.
wasn't really doing lead gen the way I needed to. I wasn't
Hmm.
really hitting the, hitting the road and being out there, building relationships, investing time in potential customers and really getting to know what they needed and all that. And partially it's because I hated doing it, and partially because I wasn't that good at it, but it was an essential part of the business. And even among the first few people I hired, I didn't hire anybody who was doing that either. So those are the
Yeah.
things that I would point at and say were the big problems. I sort of had an attitude, and it's not as arrogant as it sounds the way I'm about to describe it, but I sort of had the attitude of like, we're doing this incredible thing. We're making plastic parts that nobody else can make. People will just come to us. Right? It was
Yeah.
sort of like
Yeah.
a, if you build it, they will come. And I don't think it was from a place of arrogance as much as it was just ignorance.
Yeah.
Just
A
like,
little, yeah,
yeah, you
naive,
can have a
just
great technology,
naivety.
but if you don't get out there and sell it and market it and really put in the effort to get the
Yeah.
word out, it doesn't happen by magic.
And sales, a lot of founders love sales, right? But a lot of them don't, and it can be draining. And you're a scientist, so it's probably like you probably love the engineering part, and you didn't want to be traveling around and pitching your product. You probably were, more excited to make the product. I'm just guessing, but that is that's a good lesson. Like sales, companies live and die on sales and marketing.
Yeah, and the marketing I would say was a really important part. I think that there were some secondary things into how were we billing and what were our margins and all the rest of that. And I absolutely undervalued myself and undervalued the business. Just a
Hmm.
quick story. The first person we ever hired who really did sales, Megan Heeman, who still works for the company, when she started, she said, I think I'm going to try charging double what you're quoting for these things. I said, okay, good luck. I don't think it's going to work. And she just came back and said, yep, got that project, got the next one. She said, I think I'm going to double it again, see what happens. And so there was a point in time when she was out there charging sort of like 8 times what I was charging for the same projects. And yeah,
Wow.
it took a little bit more time for her to close deals, but not 8 times as much time. Nowhere
Yeah.
close to that. And she showed me that it was just a matter of really going through the paces with the prospects and understanding what did they need and what was the value to them and what were you bringing to them. And she taught me a lot in those early days.
Yeah, I'll share with you how I think about that. It's this isn't a very science-based approach, but it's sort of a logical approach. Okay, like if in consumer products, I don't have to make anything, I don't have to have any molds, I don't have to have any tooling, and I can buy a product and make 45% gross margin. Somebody else makes it. They have the factory, and I can bring it in and not do anything and make 45% gross margin. And consumer product companies should make 10% net profit, let's say, if they're good, right? 10%, a lot make less. Some of them make more if they have more, better brands. But let's just say 10% if they're going to be bought. Then, so if you start there, and then if you look at other types of businesses, like let's say a service, not your type, they can't make as much money because they're selling a service. And a consumer products is just, can scale way higher on the top line. But a service business is, a lot of them should make 20% net profit. Okay. Especially if they have a specific expertise, some technical expertise, but a lot of them don't get there, but maybe they're 15. They have to be higher than the product, because it's way harder to make, say, 10 million top line on a service than it is 10 million selling a product. You're making the product here in your case, right? So you're actually making it, and it's a much higher level of technical know-how and I would think differentiation and specialty than someone who's just buying something off the shelf. Okay. And you didn't share, margins, and we don't need to talk about that, but I'm just saying, that then your business, specialty manufacturer, you would think would have even a higher spread, right? As far as a net profit margin or gross margins. Yeah. And if you're not there, then it's like, wait a minute, how come we're not there? That's, if I'm working with clients, I'm like, this is how I'm thinking, right? You're doing this kind of business. I guarantee the competitors are making more money. Otherwise they wouldn't have scaled that, or they wouldn't have the team and be able to afford the level of talent that they're putting on these projects, or the sales team. But yeah, that's just a very basic way to, that I kind of go through and think about these different business models.
So you said a lot, and a lot relates to what we're doing. So our business is, I'd say, somewhere between service and product. It's not product in the sense that, again, we're not selling off the shelf products to multiples. We're selling one-to-one, but it is product in the sense that all of our customers come in, they say, help me with design, let's pay for tooling, let's develop the process, let's do testing, whatever. But eventually they get to a point where they just want to order parts. And in those cases, as you can imagine, there's a huge disparity in gross margin. And where I have really historically undersold the company was in what can that gross margin be on the NRE, right? On the non-recurring engineering, on the design work, the tooling work, and all the rest of that, because that's where all the know-how is. That's where the customer really needs a partner to say, hey, help me design this for manufacturer. Hey, what's possible? Hey, what's reasonable? What's going to hold up? What's not going to hold up? What materials can I use? Et cetera, et cetera. That expertise is worth gold. And I was charging, I don't know, copper for it.
Yeah.
And on the flip side, when they're going to buy product, they want to pay commodity pricing. Because at the end of the day, when they have a plastic product that they're getting, they work on the assumption that they could go to a bunch of other injection molders and have other injection molders make the same part for them. They don't want to pay any kind of premium to you when they feel like they can go somewhere else and pay a lower price. So margins are thin on the product production, especially at high volume. Margins are incredibly high on the initial work up front. Oh, and it makes for a strange pie that gets cut up in weird ways.
Now, is the business sticky though? Because who owns the tooling? Is it sort of sticky where they want to be with you because you sort of own the know-how and the tooling, or can they just take it anywhere?
So, gosh, it's a simple question that has a complex answer. So in most cases, our customer owns the tooling because it's a capital asset, because they purchased it with capital expenditure funds, not with supply funds. They're using supply funds to buy the parts, but they bought the tool with capital funds, and they expect to be they expect to be collecting the depreciation and all the rest of that on that. But because of our terms and conditions, they're not allowed to take possession of the tool because our tool contains proprietary technology. Nobody else in the world can use it because we have our own molding machines made by our own process. So they couldn't take it anywhere anyway. But that doesn't mean they couldn't go to a different molder and build a new tool somewhere else. So sure. It's complicated.
Yeah.
And something, you didn't ask this question, but something I'll throw in here, because some of your audience might be thinking about this. We have a non-standard process, right? Again, as we said at the beginning, we're not doing injection molding, we're doing compression molding, which is weird. And it enables us to make things that are really hard for injection molders to make. And that is very much a double-edged sword, because some of our customers are like, hey, I need these, 5 micron holes, right? 5 thousandths of a millimeter that are going to fit a specific kind of cell. And it can't be 6 and it can't be 4. And it has to be, the injection molder will look at that and say, no way, like, forget it. We look at it and say, super easy. We do that every day because we literally do. And if you look at it from the customer's perspective, half the customer's brain says, amazing, this vendor's incredible. Their capabilities are amazing. We're so lucky to have found them. The other half is saying, oh crap, what if they go out of business? Or, hey, we don't have any backup for them. We don't have any competition to keep them honest. We can't work with a vendor who's a sole source vendor. And so it's really scary. And a lot of these things, like I just described with the tool ownership, customers expect to own the tool. They work with a molder, they expect to own the tool as a capital asset. They don't expect to be told, but you can never see it or own it or take possession of it or move it or sneeze on it or anything. Literally today, we had to tell a customer, you can't even have a picture of it when it's open. You can only have a picture of it when it's closed because it contains IP that we can't allow to be seen. All of those things are challenges because the more our business looks unique, the easier it is for a lot of these people to say no, especially buyers and purchasing people, those kinds of folks. The technology folks love us, but that's because they don't have to think about the business in the end, right? It's complicated, very complicated.
Yeah. That's where sales is hard. It's that communication piece. Okay, so let's move on to the sale. So you guys got spun out. Sounds like a stroke of luck right there. And you got spun out into a new org, and then you built for a couple of years. Now, were you thinking, or just tell us about sort of, if for founders listening right now, okay, they want to think, sometimes it's really hard to look out and say, oh, I want to sell in 3 years, but they probably want to sell sometime, and sooner the better if they got an offer. So what were you thinking? Were you actually planning for a sale, or were you just kind of growing the company? Did you have specific KPIs that helped you lead into a sale? What can you share there?
Yeah, it's a complex story again. I wish any of your questions just elicited an easy answer.
Yeah.
But complex story again, and it's COVID related. So when the spinout happened in 2018, we were agnostic. We meaning me and the investor. We obviously comprised the board, and we said, hey, let's see what happens. Let's do our best work to grow this company. Let's grow revenues. Let's see where it goes. They're agnostic. They say maybe we sell, maybe we go public, maybe we do whatever. Whatever. It could be lots of things. First couple of years were quite good in terms of growth because they put in a bunch of capital. We deployed that capital to add to the team, all the rest of that. Then COVID started, and it's a whole new world. So nobody's interested in COVID stories at this point. Yeah. But the short version is there was, of course, tons and tons and tons of work done in the biotech area, in diagnostics, in everything related to COVID, right? Tons of companies chasing products that they wanted to push out, either because they wanted to help solve the health problem or because they wanted to profiteer or some combination thereof. We said as a company, we're not doing it. We're not going to take on customers that are doing that kind of work unless it's a very well-founded concept and all the rest of it. We're not doing any fly-by-night stuff for anybody. And that was smart because all the people that did fly-by-night stuff grew. They hired people. They grew really quickly. And then a year later, they had to lay everybody off because all that business went away.
You know what? Before you go on, how did you make that decision? Okay, because that's a hard one. Okay, most people don't turn down business. So
it was exactly for that reason, because I said, this is the bubble. It's definitely a bubble.
Okay, so you just clearly saw the bubble. It was just obvious as day to you.
To me and to the other people who are making decisions. Yeah. I'm not. Yeah. I don't want to look like I'm Nostradamus here. But as we sat down and strategized, that was what we collectively thought about. It's a bubble, and that we did some work in that area, but I resisted growing the business in response to COVID, specific fly-by-night opportunities because I didn't want to face the backside of that.
Yeah.
So from there, the problem was the industry as a whole shrunk once COVID was resolved. In terms of, I hate saying that. I know a lot of people suffered in many ways and long-term ways, and some people are still suffering. But once it was resolved in terms of the health crisis was contained and the product landscape settled back down, there were no new products that were coming out related to that. What we saw was a lot of these big companies lost hundreds of millions of dollars. You name a big biotech, and I can almost guarantee you they lost somewhere between 200 million and $1 billion on it. And what they've all done is pulled way back. They said, guys, we're not going to bother doing any more diagnostic product development. Well, that's where most of our business has been. So what we saw was starting in probably 2021, our sector started shrinking and our revenues actually started shrinking. And in 2022, there was a weird series of things that were going on at the same time. Number one was there was still a big wave of people saying, well, everybody knows plastics. Everybody knows plastics disposables. Everybody's using them. Lots of people wanted to buy up plastics businesses. There was tons of investment saying, see how important plastics are, because when these pandemics come up or these things come up, you need to have that capability. You need to be doing rapid prototyping. You need to be able to go into production. You need that. And so every little plastics business was getting bought up. And at the same time, our business was starting to suffer and actually go south because the market as a whole was contracting. So what happened was we started getting knocks on the door. And I looked at the investor and the investor looked at me and I said, well, guys, we have two choices. You either got to put more money in or we got to sell. And they said, let's sell. And that had to do with the lifetime of where the cycle of their fund, where they were at the end of the fund that we were funded by. So if they were going to fund us again, it would have to be a brand new thing from a new fund and a new round and a new bunch of investors and all that. They didn't want to do it, right? They had other opportunities that were more important to them, which I don't blame them for. So they said, let's sell. So, basically in the second half of 2022, we underwent the whole dog and pony. And we had, I can't remember, we had about 30 interested parties.
Oh, wow.
And I believe we did 13 what we call management calls.
Yeah.
Where we thought that they were serious enough and that they were had enough of the right attributes to be a potential buyer that we actually met with them, gave them access to a data room, at least the initial level access to a data room, went through that process. We had about 13, I'm pretty sure is the number of those management calls. So we had 13 legitimate interested parties, I would say.
Yeah, that's a big group. And then how are you able to share how many at the very end, how many made it to the very end? Obviously you had one buyer, but.
Yeah, I can't get too specific, but I'll say that by the end of it, there was a group of only maybe 4 or 5 who we thought were really good fits, where we had confidence that they would actually make a deal or whatever. And, and I'll say that 2 of those companies, and I'm obviously not going to name names, wanted to do sort of stock-based transactions as opposed to cash-based. And they were both companies that we didn't find to be particularly healthy. They're both companies that are out of business now and have been out of business, for a while. And so it wasn't very hard. There ended up being a pretty small number of companies that we felt like, hey, that's a good landing spot. But in terms of ticking all the boxes.
Sure.
A, they're going to make a cash offer and the cash is going to be there. B, the employees, not me, but my team, will all be taken care of. They'll all have jobs to go to, and they have a future. That there's a business plan that makes sense that the potential acquirer is putting in front of us, and we say, yeah, that makes sense. That's a good way to use this business. Mm-hmm. And at the end of the day, Xeon, who's the company that ended up buying us, from the moment we first met them, I said, this is the best fit for us by far, and in fact, it is the best possible fit there could be. I couldn't have imagined a make-believe buyer that would have been a better fit for us. And that's because they're the manufacturer of the plastic that almost all of our customers prefer. We were already intimately familiar with their material, and we knew their material to be the best for our industry. And we were already, 80% of our customers insisted on using their material. They were looking for people who could make stuff in their material, and they wanted to integrate vertically, right? Not just manufacture the material, but now manufacture the end parts. They said, look at this company Edge. That's what they're already doing. And we said, boy, we'd love to know more about this material. Turns out Xeon, of course, they invented it, and they have 30 years of knowledge of how this material works and all that. The end of the first week after the acquisition, we knew more about that material than we had learned in the 17 years before that, because we got to talk to the guys who were in the room who invented it, because they all still work there. In Japan, there's still company loyalty, and people work 20, 30, 40 years in the same place.
Wow.
So it was amazing. It was amazing for us.
Yeah, what a fortunate story. So, but still, you had a big group of interested. I mean, obviously, you're doing a lot of things right. Okay, it's you had a bunch of companies go through the process, and I think an obvious lesson is, if when you sell your ideas to take chips off the table, stock promises aren't chips, so you can't spend those usually right away. So I think that was probably one important. I'm guessing that was one important thing. But I know we got to land this plane here and get to the end. What was maybe some advice you would give to other founders going through a PE exit, either how to get PE interest or how to complete the exit, in a successful way.
Well, I can only speak to my one experience. Obviously, I can't claim to be an expert, but I can tell you that what I think made the difference in our case was really putting in the effort to understand what is the value to the potential acquirer, how are they doing that calculus, what matters to them, and how to discuss that with them and how to really get on board. Because Xeon made the decision not based on a whim or based on, hey, let's try this or that seems good or whatever. No, they built a really serious plan and said, this is what we're trying to do. We're trying to leverage, companies that can manufacture this material and blah, 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 and get us further into the chain of life sciences and healthcare and all that. You know, Once I understood that, I was able to talk to them directly about what is that actually going to look like and what is the team here. And I said to them, we'll keep the team. Yeah, we're all going to get paid off on the stock that you're going to buy. We're all going to make money. No one's going to run away. We'll commit to staying on. We'll commit to building this business with you. We'll commit to doing all those things. To me, that was the key, because the people you meet when you're doing this process, they're usually going to be technical people, business people. They're going to be really interested. But there's always, for every one person you meet, there's 10 people in a back room or a back office somewhere, excuse me, who you don't meet, who are just looking at dollars and cents and business plans and all these other things. And those are the people you have to make sure are satisfied. There has to be a really, really sound business plan, really clearly communicated, and there has to be that synergy, or at the end of the day, the deal is going to fall apart largely from people you never even meet. Does that make sense?
Yeah, that's exactly there's so many different pieces as you explain it, right? And it's sort of like, know your customer, and this is your PE is now the new customer, and you have to just know, in this case, it was another, well, Xeon it's another company purchasing you, right? So it's sort of like a roll up.
Right.
So they're not factoring. It's not just financial. They're also looking at the fit, like you talked about, and how to get vertically integrated. And so you had to check off those boxes. Last question. You've exited, but you're still CEO now, right? You're still running the business. So yeah, why don't we wrap up with just share what you're doing right now, any final words, and how folks can get in contact with you.
Yes. So, I mean, I'm doing the same thing I was doing before. I love the people side of things. I love the team that I work with, which is now not just the team of employees at the company, but obviously the people I report to and work with on the new board of directors that's managed by the parent company, and our sibling companies that have also been bought up in the same portfolio. I love that work and I love learning, right? And what I tell people is, yeah, I've been a CEO for 20 years, but CEO means a lot of different things. I was CEO when the company was literally just me.
Yeah.
And, anybody can be a CEO in their own basement, right? Just like we
Mhm.
can all be rock stars singing in the shower, right? But in the last few years since I've joined this larger company, I've learned more about being a CEO than I ever learned before, because now I really have to answer to people. Xeon parent company, it's like a $3 billion company.
Mm.
And so they expect all kinds of things in terms of record keeping and reporting and planning that we never had to do before. So I'm still very much in a learning curve, and I'm with a great group of people who are really happy to invest time and effort in me to get better. And why would I go anywhere? If I love the people I'm working with and I'm growing as a professional and as a person, I have no incentive to go anywhere.
Yeah, you found a great fit. And where can people find you on LinkedIn?
Yeah, just on LinkedIn, just at my name,
Yep.
which I guess will be in the show
Yep.
notes or something.
Andy
And
Camholtz. Yep.
and the messages are open. Drop me a message if anybody wants to chat. Always happy to.
Awesome. Wonderful. Thanks for being a guest, Andy.
My pleasure. Thanks for having me, Luke.